factoring, and this is for everyone's benefit. So I'll just go into factoring a little bit more. Factoring is actually a way of finance that banks have been doing. So let's just say that like your first choice when it comes to getting some credit for your business is to get a line of credit. But to get a line of credit, there's several obstacles you have to overcome, or boxes that need to be checked by the lender before they extend that line of credit to you. And so a second type of financing for people that don't qualify for a line of credit is what's called factoring. And that's where the bank says, okay, we will, and this is all because you need money for your business for cash flow. And so what the bank says, okay, as soon as you invoice a customer, instead of waiting, whatever your terms are, let's say you have, you get paid in 30 days or 60 days. Instead of waiting for 30 or 60 days, the bank will pay you the money for that invoice the day you issue it. And then the bank will then collect the money from your customer, and they charge a fee for that. And so an example would be the bank might say that, it depends on, your past invoicing history and your receivables, and
Right.
how well your customers pay. And are you doing business with new customers or the same customers over and over? The bank looks at all those different criteria, and then they'll come up with a percentage. So they might say, okay, we'll pay you 90 cents on the dollar for your invoice. So you issue an invoice for $10,000, they give you 9,000 that day, and then they collect the 10,000 from your customer. A notice is sent to your customer directing them to make their payment payable to so-and-so at the bank and so forth. And so they make 10 grand on the deal by fronting you the 9,000 and taking the risk. And so what we do to help our clients protect their assets is we just structure the same way, but instead of doing it with the bank, we set up a separate LLC that you own. Probably, you wouldn't own it directly. We'd have it inside some type of asset protection structure, but
Right.
you would be the beneficial owner of it. You control it, and all the money comes out to you. So you would just use your own money, put your money into the LLC. Like say in my example, put 10,000 into the LLC, and then transfer 9,000 of that over to, under this example, over to your construction
I
business.
get it though.
Okay. And then that LLC collects the money. And so that's a way, depending upon what your profits are, that's a way that you can take all your profits and put them into a separate entity. Because remember, if you ever get sued, you're allowed to use your revenues for regular operations. You're allowed to keep doing that. So we're not really concerned with protecting that amount of cash that you use for your monthly operating expenses. So